First of all, I just want to say hello. Welcome everyone to this evening's webinar on the fund to fund model and our very first offering, the Cashflow MD Capital Fund 1. We are super excited to be bringing this unique investment vehicle exclusively to our investors. And I really appreciate everybody's time tonight. There is quite a bit to cover. So I really just kind of want to give you a brief rundown of what to expect from tonight. So our agenda is as follows. First of all, we're just going to give you a little bit of background on who we are. We're going to talk about the traditional fund model versus the fund to fund model, and then introduce the Cashflow Capital Fund 1 to you all. And then we'll have one of my team members give you a brief walkthrough on what to expect when you get on the portal and really go through an exciting car wash opportunity that is the first of many deals this fund is going to give to our investors options for investing. If that sounds okay to you all, we need to get some legalities out of the way first. You know, the attorneys always make us do that. So let's do that. This is just a slide. I'm not going to read the whole thing. This is just a slide saying that we are not licensed financial advisors, nor are we giving financial advice. And you are encouraged to do your own research. This webinar and all of our future offerings are only for accredited investors as well, just to let you know. So first of all, I just want to let you know a little bit of a background for those of you who may not know me or maybe new to my platform as to basically how my business was born. To start out with, I live in Louisville, Kentucky currently, and I'm married to my awesome wife of 21 years. We've got 4 amazing kids, ages 20 to 15. We've got twin 18-year-old boys having a graduation party tomorrow night at our house, so no pressure there. I'm an anesthesiologist by training, but an entrepreneur for a living for over a decade now. After practicing anesthesiology for several years, I was diagnosed with a progressive visual disorder. And this was eventually going to prevent me from being able to practice anesthesiology and provide a living for my family. So I understood at that point, I was going to have to find out alternative ways to create wealth outside of medicine. So I researched a lot of different asset classes, including paper assets like stocks, bonds, mutual funds, ETFs, those types of things. But I actually saw my dad lose pretty badly in the stock market twice, once during the dot-com crash and another during the Great Recession. So I really wasn't too excited about that asset class, seeing how it failed him when he needed it the most during his retirement years. I didn't know a ton about oil and gas at that point, but I had several physician friends who were kind of sideways in a working interest deal. So I wasn't very bullish on the oil and gas industry at that point either. And then a good friend suggested that I read Rich Dad, Poor Dad. And if you haven't read Rich Dad, Poor Dad, it's required reading for anybody around me because it really changed everything. I'd done some flipping. I'd owned some single family rentals and some single family home long-term rentals. And it helped me actually pay for medical school. But I really decided to jump in with both feet into real estate and really knew I wanted to take advantage of the economies of scale, specifically that at that time, multifamily had to offer. I think most of you on the call who are physicians would agree that, we learn more about our craft in residency than anywhere else. We learned a lot in medical school, but we really honed our skills in residency. So my business partner at the time, who was also a physician, he's an ER doc, he and I decided to find operators in multifamily who were best in class and pay them to teach us everything they knew. And we found a group, we paid them, they opened up their entire business model to us. And we really learned everything we could from them through about a 9-month, we called it our real estate residency. And after that, we started in commercial multifamily. We grew to about 800 units between he and I. And then I started actively acquiring and investing in other subclasses of real estate, including hotel and restaurant, and really started to dive deep into actively investing into a lot of different classes like short-term vacation rentals, self-storage, single tenant net lease like Dollar General, Walgreens, Fresenius, medical office buildings, timber, land, single family home portfolios, RV parks, mobile home parks. Did get into oil and gas and mineral rights eventually, maritime shipping, and obviously car washes, which we're going to be talking about tonight. And basically, if it's a hard asset that I can touch and I can see, then I'm interested in learning about it and investing in it generally. So fast forward 10 plus years to 2022, I had a lot of my physician colleagues experiencing burnout, lack of job satisfaction, really having to see more patients for less compensation. And really, for the first time in my medical career, physicians being concerned about job security. And that's scary. Several reached out to me and wanted to have coffee or dinner or lunch and understand how I was able to be financially free through real estate and investing. And after gaining about 50 pounds, I realized that putting together a platform where information could be shared in mass was probably a much better approach, especially for my waistline. So that is how the Cashflow MD was born. And my mission is to equip, to empower, to enable physicians and other entrepreneurs to really create diversified passive income streams so that you can stop trading time for money and work because you want to, not because you have to. Personally, I have been a key principal on over $170 million worth of real estate and business transactions, from the acquisition side all the way to the exit side. And I am super excited to use my background in collaboration with all the bright minds that we can gather to embark on a journey to financial freedom for everybody in my circle. So that's me. I want to take now time to introduce Colleen. She is our Director of Investment Operations. She's basically our COO, and she is a major integral part of our business moving forward. All of you who invest with us will get to know her very well. So Colleen, I'll let you take it over.
Thanks so much. Hello, everyone. I'm Colleen, and I'm a Los Angeles area native. I live in Pasadena, California, with my husband of 12 years and our very spirited and sweet 8-year-old son. I have a corporate background in operations and administration, in construction technology, commercial investments, and multifamily development. And like Danny, I'm an entrepreneur, always looking for ways for my money to make money for me. And my goal is to reach financial freedom so I have more choice of how I want to spend my time. I know a lot of us share that goal. And about 5 years ago, I started on that journey by investing in residential real estate. I did fix and flips, purchased performing rental properties, value adds, and I currently hold long-term, mid, and short-term rentals in Ohio and Illinois. And some of those investments are not passive. They're quite active, very hands-on, and my son has definitely felt that. He recently asked, when are you going to stop working so much so you can spend more time with me? And I, that hit me pretty hard, knowing that everything I do is for the family and to build wealth for me and my loved ones. But time is our most important asset. So to reach my goal of financial freedom, and have that extra freedom of my time, I've started to pivot into larger, more passive investments like the ones that Danny is bringing into our fund. So that's it. I'm happy to be here, happy to be part of the Cashflow MD team and to support you in your investor experience. I'll hand it back to Danny to dig into the fund model.
That's awesome, Colleen. Thanks a ton. We're super fortunate to have you on board with us. So the fund-to-fund model, this is not something I came up with. I wish I did. Probably wouldn't be doing this webinar if I did, because whoever did is a genius, and they're probably retired on an island somewhere. But I did not come up with this. It's relatively new to the scene. From my standpoint, though, it is for my investment strategy. It was really born out of necessity, and I really do think it's the wave of the future for syndication investing. Moving forward, as more and more people began to ask me for access to the curated deals that I was investing in, I realized there was a need for a more inclusive investment model. Many of the deals that I'm involved in have minimum investment requirements of, sometimes 7 figures or higher, which just really left a lot of investors out of the picture. Enter the fund-to-fund model, and this really allows more people to come alongside me and what I'm doing, or whoever the fund manager is. I've been a full-time investor for over a decade now, and I've curated deal flow, relationships, network that a lot of people just don't have access to. But with the fund-to-fund model, I can help solve this problem by aggregating capital and really offering more investments to more people. I believe this model is going to prove to be a very highly effective investment tool because, pooling our resources together, excuse me, we can invest in a wider range of deals through one fund and achieve potentially better returns than we ever could on our own. So, whether you're an experienced investor looking to expand your portfolio, or maybe this is your first webinar or anywhere in between, I believe, after the next 15, 20 minutes, you'll see that the Cashflow MD Capital Fund is really a great way to invest and to get better negotiated terms, maybe generally lower minimums, get one-stop shop accounting, curated deal flow with really the majority of the heavy lifting of due diligence completed for you. And really you, the investor, has control of your money and where you want it to go. So to compare the fund model and the traditional fund model a little bit, I don't want to go into a ton of detail about fund mechanics and modeling and those types of things, but I really just want to point out a few differences between the traditional fund and the fund to fund, which is what the Cashflow MD Capital Fund is. And so just so you know, I'm saying fund of fund, just so you know, it's kind of a new term. This is how the investment vehicle is being described. What this means is I start a fund that you can invest in, and then that fund is able to invest in a lot of different deals in a lot of variety of ways. With normal funds, generally they're centered around one specific asset class. We'll just say multifamily. You give the sponsor of the fund money, and with the full faith and confidence, they're going to go out and invest your money in a portfolio of apartment complexes or multifamily. That will give you some sort of return over the lifetime of the fund. Once you invest your money, though, the fund manager decides what assets the fund will be invested in. You don't really have a say in it at that point. There's generally a 5 to 7 year lockup, sometimes or even a 10-year lockup on the money. And it's kind of stuck in that fund for the lifetime of the fund. So, and also the capital that you invest in that fund may not be called all at once. It may be, but it may be called over a period of time. So your money may not be going to work for you immediately in a traditional fund. The way the fund to fund works is, it can give the investor a lot more diversity. And, it really allows you to invest in several different asset subclasses all within the same fund. So when you log into my fund portal, you're going to see a lot of different investment options that we offer. You'll see, first of all, a car wash. That's our first one we're offering. Maybe a short-term vacation rental fund or portfolio, maybe mineral rights, maybe apartments, maybe debt, maybe self-storage, maybe maritime shipping, et cetera, et cetera. You get the point, right? And then what makes it different is you, the investor, direct where you want your money to go. So, with my background in investing in a lot of different asset classes, it made total sense for me to have a fund that offers my investors the opportunity to invest alongside me in these deals as well. And, as the fund's starting out, there's only going to be one option to invest, which is the car wash deal that we'll get to a little later. But there will be many other options coming soon. And, once again, through the fund to fund model, I just can't emphasize enough, you will be able to direct where that investment goes. And it makes it truly, truly unique. So the deals that I'm offering are generally difficult for the public at large to have access to. Maybe they're only for family office or institutional investors. But, since I have a large group that will invest a larger sum collectively, I may get a seat at that table. Or, the minimums on some of these deals are $250,000. And that may just be too big of a number that doesn't make sense for an individual investor. But, my fund may be able to offer $50,000 or $75,000 minimums on that deal. Or, the deals that are just offered to my network or groups or masterminds that I'm a part of that fill super quickly, that never even make it to the general public. I'll be able to offer my group through that, or I'll be able to offer that type of investment to my group through my fund as well. Additionally, I'll be able to use our collective to really help negotiate benefits for our group over what normal retail investors would get a lot of the time. Maybe it's better returns. Maybe it's getting access to a better class of shares or putting us in a preferred position that's safer. Maybe it's lower minimums, like I mentioned earlier, or maybe it's a better preferred return. There are lots and lots of possibilities, but using us as a collective will always, always help us as a whole. Another differentiator with the fund to fund model is that you get one K1 for all the deals that you're involved in through my fund. Let's say you're invested in the car wash deal, and then there's a short-term vacation rental deal you're in, then a development deal, then a mobile home park deal. Well, at the end of the year, we take all the respective K1s and coalesce them to give you one K1 at the end of the year from the fund. You don't have to worry about the hassle of chasing down all the sponsors for all those deals to get all those K1s. Well, we have to worry about that, but you all don't. You get one clean K1 at the end of the year, and your CPA is going to absolutely love you for it. Another benefit is the portal itself. Our platform is hosted by a company called Avestor, and their dashboard has tons and tons of real-time information for you to see as soon as you log in. It's really a user-friendly, robust platform. And, I can't emphasize this enough. I think the biggest benefit of the fund-to-fund model is you direct where you want your money to go. And to be clear, all of the deals that you see in my fund or my portal are deals that I'm personally putting my money in, I'm investing in. So it's really, you're never going to see a deal that I just put on there because it would make me money or something. I'm not going to do that. I'm always going to put my money into these deals. That's how this whole idea was born. It's really just deciding whether or not you guys want to come alongside me and if it makes sense to your portfolio to invest. So when you log into my portal, you'll see the deals being offered. You can click on those deals. You can read the offering memorandums. If there's a webinar recording, you can see that. You can go on and make a soft commit at that point. You can set up a time with me to talk about it. The cool thing is you don't have to invest a penny into the fund to sign up to see the offerings. You only invest when you find a deal you like. So your money goes to work at the deal level pretty much as soon as you invest in the fund. It really allows us to be very flexible with how we want to enter deals as well. If returns can be levered up by entering the deal as a limited partner in a Class A share, for example, then that's how we'll enter it. It just simply offers us a much more flexible product than the traditional fund structure does. Lastly, a question I've received a lot is about lockup time. We talked about the lockup time for the traditional fund. The lockup time for your money is really deal specific. The fund itself is a 2-year lockup, but most of the deals that we'll be offering are usually longer in duration than 2 years, with the exception of maybe some debt deals. And then we'll talk about that on a case-by-case basis. But the point being, the lockup period is based on the deal you're investing in, and you'll know that up front. There won't be any surprises. I do want to address fee structure briefly. We won't be receiving any income in the form of fees at the fund level. There will be expenses that the fund will incur, like, tax prep being one of the major ones that comes to mind, and the Avestor portal. But we're not going to make any compensation at the fund level. I know some people do, but we just choose not to. Any compensation we receive will be at the deal level, and it'll be disclosed in the portal on the deal disclosure document that you'll be able to click on and review in the portal. It's all going to be very transparent. You met Colleen earlier, but once again, she is our Director of Investment Operations, and I'd like her to come back in and kind of walk you through what you will see when you jump on our portal for the first time, and really how easy it is to see the deal you like and find out all the information you want to know about it. So Colleen, I'll let you take it over again.
Great, thanks.
Yep.
So we designed this to be as intuitive as possible. You'll start out at our website, fannybramermd.com, and click on Invest Now. That will take you to our Cashflow MD Fund page, and you'll click on Explore Fund. And that will take you to the Avestor platform where you will create your account. Once you're logged in, you'll have access to view our investment offerings. You'll have the ability to indicate your soft commitment. And when you're ready to invest, you'll complete your account setup and review and sign the deal-related agreements. And that will look a little bit like this. And then we'll review your request. And once you're approved, you'll be ready to fund your account. And then once you're funded, you'll have, as Danny mentioned, real-time access to your dashboard to see your distributions, your investment performance, tax-related documents, and of course, new investment opportunities as they become available. So if you have any questions while you're going through this account setup process or investment process in general, we're here to support you. We've added our contact information on a slide at the end of this presentation. So please don't hesitate to reach out. And that's it for me. We'll head back to Danny.
Thanks, Colleen. And hopefully now everybody has a very clear idea of how the fund-to-fund model is unique and how it really puts you in the driver's seat, and hopefully how easy the portal is to navigate. It really is intuitive, but like Colleen said, we're here to help you drive through there. I would encourage you all to go to the portal and sign up for access to the fund right after this, so you can actually take a look at the car wash deal. My marketing team, Stuart, he's gonna, I don't know if he's put the portal registration link in the chat yet, but it will be in the chat. So you can copy it there and go to that after this webinar. Once again, we want to remind you that there is no fee, no charge to look at the offerings of the fund. Even if the car wash deal isn't something that you're super interested in, we're going to be bringing several deals online very soon. We've got a short-term vacation rental portfolio that I'm really excited about. That's a couple weeks out. So go ahead, sign up, see what the deal, see what the different deals the fund has to offer, and let us know if you have any questions. However, the car wash deal is one of my favorites, and we're going to talk about it right now. So let's pivot to give you a brief overview of the car wash deal everybody's anticipating. You will receive a webinar recording from Dan Hanford, who is the main sponsor on the deal, along with a recording of this webinar, either tonight or early tomorrow. And all the information, the subscription documents, will be on our portal for you to access immediately following this as well. So that's why it's important that you all go ahead and sign in, get on the portal, review the deal. So as far as this car wash offering, it's called the Pick 6 car wash portfolio. Well, it was a mouthful. And it's sponsored by passiveinvesting.com. We're going to say pi.com just for ease of discussion here. I've known the team at pi.com for several years, especially their principal, Dan Hanford. I am an investor with him as well. Dan and I put a passive investing for physicians conference on together about a year ago. And I know this team really well. I really like them as operators, especially in the car wash space. They operate with excellence everywhere, but I really like their car wash, the way they've built their vertical. I've personally done a ton of due diligence in the car wash asset class, and I love the strategy pi.com is using with their acquisition, their renovation, their rebranding, and their vertically integrating to prepare for a very large exit. There's several things that have me excited about this deal specifically, and I'll hit them on the highlights, but you can read about them in the offering memorandum on our portal as well. You can see on the slide here, the overall purchase price is just north of $43 million. That's for 8 different car washes in very desirable locations in South Carolina and Alabama. The Huntsville area, specifically in Alabama, they're kind of I don't know if you're all familiar with that MSA, but it's booming. We already have lots of memberships and lots of car washes per day. We're able to purchase these locations at an average of about 5.4 million per location, which is, if you know anything about the car wash space, that's excellent, considering most car washes are about $7 to $9 million to construct one express car wash. So I will let you know this is a fairly tight timeline. They would like to have funding completed by June 2nd. And these will definitely fill, as they are wildly popular with our investors. The car washes are wildly popular with the investors. So we are able to take SDIRA and solo 401k funds as well. We're not set up at this point to take qualified plan funds, but hopefully that is coming soon. The minimum to invest with pi.com is going to be $100,000, but we are able to make our minimum $75,000 if that makes it easier for some folks. However, I'm putting well north of $100,000 of my money in it because I really, really like this portfolio. The last thing I'll say before hitting things on a high level return model is that I am a co-GP on this deal. But other than that, I have nothing else to disclose. And as I said, there will be a deal disclosure document in the portal that will go through all this. I mentioned earlier that there will be a link to this webinar and the webinar Dan did on the car wash deal, specifically in the portal. An email will go out with all those links. So when you get those, feel free to share it with anybody you think may benefit and who are accredited investors as well. They need to be accredited. So let's talk about the return parameters of this deal. I love it because it checks a lot of my personal investment parameters, and that's how I look at deals. I have several different investment parameters I use, and this checks pretty much all of them. It has great cash flow at over 9% cash on cash, not including the sale proceeds over the lifetime of the hold of this deal. There is a true 10% pref. I'm not sure if it's on this slide, but it's a 10% pref with no GP catch-up. The GP catch-up meaning that you all are going to get 10% before the GP sees anything. It's projected to be over a 20% IRR and over a 26% average rate of return. And the IRR and average rate of return, if you guys aren't super familiar with that, just think of IRR as a return metric that takes into the account the time value of money. And the average rate of return is just literally what it averages annually over the course of the investment. So if you invest $100,000 and it's a 26% average annual return, that you would expect over the lifetime to make $26,000 per year on that investment. And what's not pictured, I don't believe it's a question I get a lot, but the MOIC or the equity multiple, it's expected to be over 2.3 in this deal. And one beautiful thing about the car wash industry is there's massive depreciation benefits that are passed down, and we will see those passed down pro rata to our fund. I just talked to Dan about this. He doesn't want to overpromise and underdeliver, but they are expecting, anywhere between 70 and 80% depreciation, even with bonus depreciation dropping to 80% this year. And just to kind of K through 12, that means if you invest $100,000, you'll likely get a $70,000 to $80,000 loss on your first year K1. And, that can go against all of your other passive income, or if you're a full-time real estate professional, it can go against your active income and offset that. And additionally, I believe these projections, in my opinion, are based on very conservative exit parameters as well. The car wash industry as a whole is really the darling of private equity. And there are very good opportunities once a critical mass of number of car washes are reached to hit a very impressive multiplier or even go IPO route as an exit. The industry really is on the front end of consolidation. So I expect there to be very good returns for years to come. The general partnership is actually accounting for over 10% of the total equity raised. So we are investing our money right alongside all the other investors as well. So we definitely have skin in the game. And finally, the leverage on this deal is very manageable. It's going to be around 60%. So no matter what the economy decides to do, the risks of us going into an economic downturn are really mitigated. So I have been talking a bunch. I just want to make sure right now that there's not any questions that we need to talk about. I'm going to take a drink as well. Quiet bunch. I did have some that were sent in preliminarily. I had some folks that weren't going to be able to make the webinar, but they sent their questions in. But Colleen, can you check the chat? My vision is not the best. So is there any questions burning in the chat right now, or can I just move on to the other questions?
You can move on to other questions.
All right, perfect. So the first question I received was how often are distributions going to be made? Great question. This isn't true with all of their offerings, but with this one, it will be paid out monthly, which is nice. It's going to be a monthly check that's going to be deposited into your account every month. We're looking to close by mid-July on everything. So by August, or maybe even, August or definitely September, you'll start receiving cash flow from this investment. And another question I got was, trying to remember. Oh, how long is the anticipated hold? And I was talking to Dan about this, and he and I are of the same mindset. You want to try to get investors' principal back as fast as you can, and as much momentum as the car wash industry has, I would be shocked if we held all of these for 5 years. But that is what the pro forma, and that's what all the numbers are based on. If we sell it sooner than that, it's likely going to be a better return. So, but for this point, we're going to say the anticipated hold is 5 years. But if we can have an exit for the entire portfolio, there's 5 other portfolios before this, and that we're continuing to grow more car washes after this. So if somebody comes along and offers us the right number, then we'll obviously sell. So, but 5 years is what we're telling people. And the other question was, do we own the dirt? And great question. Yes, we own the real estate and the asset. There are a lot of car wash syndications, not a lot. There's a few car wash syndications out there that are just owning the car wash itself. But we believe the best way to move forward and to mitigate risk of landlord-tenant issues is, and really to allow the best multiple on exit, because private equity pays much higher multiples on car washes that own the real estate as well, is to actually own the dirt as well. So that's what we've done. Another question, it was kind of more of a granular question. It was from somebody who's been in the car wash business. So there's different sizes of tunnels, and the longer the tunnel, generally, the more cars you get through, the better your multiples are. All of these are above 100-foot tunnels. So that there's 3 different types of car washes. There is the express car wash, is what we're talking about. There's self-service car washes, and then there's like the in-bay automatic, where you just pull in and it kind of goes around you and then you pull out. But these are these long tunnel express car washes is what we're talking about. And all of them are 100-foot or more. I think there's 2 that are just under 100 feet, but they've actually pro forma'd lower membership growth and lower cars per day on the smaller sites. So they've taken that into account even. Another question we got is, are loan rates locked, and for how long? With the interest rate environment we're in right now, it's a great question. People are concerned about that. All the loans that we have rate lock caps on them, and they're at 5-year term, 20-year AM. Some of them are at 25-year AMs. So the cash flow, it allows us very good cash flow, and all the financial modeling that was used to underwrite used the highest rates possible. So say if the rate lock cap was 9.5%, then all this financial modeling that you're getting is based on those highest rates possible. So we obviously don't expect rates to hit that high, but felt that that's a nice little insurance policy that makes sense. If we plan for the worst and these are still the returns we can get, man, it's just going to be an overall better investor return if we're right and the rates cool down or even drop over the next several years. I mean, I think we've probably seen the last of rate hikes. Maybe they stay here for the rest of 2023, and 2024 they start to slide down again. I mean, that's just my financial outlook. Take it for what it's worth, but regardless, it's all been modeled into the return pro forma you're seeing. And another question was, when will we get our principal back? Is there an anticipated equity event? There is always the opportunity, or if there is the opportunity, we are always going to look at that to get investors' principal back as soon as possible. PI.com and I firmly believe as soon as we can get our principal back and go put it to work somewhere else, then that's better for the investor. And then our investment's still staying there and growing. They don't underwrite for refinances, but they're definitely looking into that. If the opportunity presents itself, if rates start to cool off again, or we already have a very strong equity amount of equity in our purchase price. So it could make sense that there could be a refinance in the next 2 to 3 years. But that's not something that they're promising investors. And I think another question was, when are they going to close? Well, I mean, all the assets are under contract to close, and they're going to close from mid-June to mid-July. So like I said, likely to get a distribution check starting in August or September. So have any other questions jumped in there?
We do have a few questions. Do we have a list of preferred self-directed IRA custodians? And not that I know, Danny, you have some that you like working with. We can
I don't know how preferred they are, but I have had a lot of good luck with IRA Club. They're in Chicago, and they do a very, very good job of working with all of my investors. And that's really what you need, because it can get kind of clunky working with self-directed IRA folks. So yeah, IRA Club is somebody, and if you reach out to me offline, I can make an introduction to the person that I work with over there for sure.
Great, thank you. Another question came in. What percentage of the investment would we get for depreciation in year one?
Yeah. So, like I was saying before, there is, I was talking to Dan about this, and he was feeling pretty confident that 70 to 80%, even with it going down to 80% bonus depreciation this year, felt confident that you would get 70 to 80% depreciation in year one. So if you had $100,000 investment, you're looking at $70 to $80,000 loss on your K1 that year.
Great, thank you.
So I hope all that helps, guys. I am really, really excited to be able to bring this investment option to our group. I've been working on this for a long time. I know some of you on the webinar, we've talked about it, and I keep saying it's coming, it's coming. So it's finally here. So just to wrap this up, I really, really, really thank you guys for your time, your attention, your great questions. I am very excited to bring this unique opportunity in the car wash space to all of you all. And the next steps will be head over to our fund page tonight, get access to all the information about the car wash deal. There is an offering memorandum. If that term is not familiar to you, it basically goes page by page over the entire car wash deal. It talks about the metrics, why we like car washes, where they are, what, a little more deep dive into the financials, those types of things. And if you're ready to invest, you'll be able to do it right through the portal. If you'd like to set up a time to chat, you can use this opportunity to jump on my calendar or email me at danny@thecashflowmd.com, or you can reach out to Colleen as well. And I know this investment deadline of June 2nd is quickly approaching. So I just want to be able to answer questions as quickly as possible. And this opportunity is going to be very, very popular with investors. And, it will be fully committed, as the rest of the car wash offerings have been fully committed, because it just checks the boxes of cash flow and depreciation and a high pref, a safe and secure asset class, and really good equity multiples. So we will make the links to this webinar replay and the main deal sponsor, Dan, his webinar replay available in the fund portal. And you'll also, like I said, get replays of this link as well via email. So we are just really, really excited to roll this fund out. It's been a long time coming. And my goal is to make this fund a one-stop shop for all of your investment needs. Tonight, it's a car wash. Next week, we use the fund and you can invest in a short-term vacation rental portfolio, or the next week you can get mineral rights. But it's you looking into the fund and then looking at each deal and taking your money and telling the fund where to put it. So it really puts your investing in your hands. Now, realize I'm not just going to put any deals up there. All of these deals are the deals that I've done due diligence on, I'm either a part of or am investing heavily in. So they're curated deals. I don't want you to think you're just going to have to go and figure them out, but it's kind of nice to where you can say, okay, I want more cash flow this time, or you know what, I want maybe some legacy minerals for my kids and grandkids, and I have an opportunity to pick those up. So it gives you the ability to look at curated deals that you hopefully feel that, you know, there's been a lot of due diligence done on. So with that, I'll stop rambling on. I just wanted to kind of keep this to 45 minutes, and it looks like we're right there. So thanks again, everyone. Have a nice evening, and you can scan this QR code and that'll take you to my calendar link, or head on over to the portal and start clicking around and checking out the deal. Thanks, everybody.